if you want up to 20 free stocks. Moomoo is going to give you up to 20 free stocks when you open a new Moomoo brokerage account and you put $100 in that brokerage account. They're going to give you 8 free stocks. If you open that brokerage account and you decide to put $1,000 in that brokerage account, they're going to give you 20 free stocks, publicly traded companies. Get down in the description box, click on that Moomoo link, open up that new Moomoo account today, go get that free stock, go get that free money. In today's video, I want to walk you guys through 7 bad money habits that will keep you from financial freedom. The first bad money habit is being overconfident. Things are going very well in the stock market. Things are going very well in the real estate market. So it would be easy for us to take that for granted and become overconfident. We should always look at the fundamentals. We should always be looking at what we have our money invested in, and if for the long term it's the right thing to have our money in. Periodically do check my investments and I make sure I'm in the right things. Although things are going well now and it's easy for us to say it'll always go well. Don't get overconfident because everything's going well. Don't take your eye off your money. Always be checking to make sure that the investments you have your money in match up with your long-term investment goals. The second bad habit with money is impatience. One of the things I've seen over the last year is people trying to time the market. And that's a sign of impatience, right? Because if we really understand the stock market, we'll know time in the market is better than trying to time the market. Same thing with real estate, right? The key to building wealth is being patient. See, patience is a good quality for us to have, especially when we're trying to build wealth. Because oftentimes, building wealth takes time. So if you're an impatient person and you're always trying to figure out what the next hot thing is, you're not going to give your money time to grow in a particular investment because you're going to be moving it quickly because of your impatience. So develop patience. That's a good quality that'll serve you well while you're trying to build your wealth. The third bad habit with money is over leveraging yourself. Guys, I talk a lot about leverage on this channel. I'm a big believer in leveraging equity in your home. I'm a big believer in leveraging your great credit through credit card arbitrage. So I'm okay with leverage, but it needs to be smart leverage. If something were to happen and the market crashed, whether it be stock market or real estate, and if you're over leveraged and you don't have enough money on the sideline to get you out of that situation, it could ruin you, right? It could destroy your financial future. So be careful with over leveraging yourself. I know in the market we're in now where everything is booming and people are saying, hey, don't miss out, right? You want to be in on this. Leverage everything you can leverage and put your money in. You'll make a bunch of money and you can pay off that leverage. Be careful, guys. I've seen this happen in 2008 where people over leveraged and then all of a sudden the music stopped and they didn't have a chair to sit in. So please be careful with over leveraging yourself. Smart leverage is good, but over leverage is bad. The fourth bad money habit is investing blindly. You know, we hear a hot tip on television, or one of our friends has a hot tip that they pass on to us about a certain investment, whether it be real estate or in the stock market. And then without us doing any research, we quickly take our money and put it in that investment thinking, wow, what a great tip I've gotten. And then all of a sudden we lose our money. And then we wonder why. And the reason I know this is happening, guys, is because I'm getting contacted from subscribers telling me their horror stories of taking their hard-earned money, putting it in investments that they did not know exactly what the investment was, and either they got scammed or it was just a bad investment. So what I recommend, guys, don't invest blindly. Do your research, right? Go out and take a look at these investments. Do your research first. And then if that investment seems like a solid investment and it lines up with your financial goals for yourself long term, then proceed. But don't just take someone's advice not even my advice or anybody else's advice, before you do your homework to make sure that's going to be a solid investment for you. The fifth bad habit with money is not being diversified. I often say on this channel, never keep all your eggs in one basket. For me personally, I don't do that. I have part of my net worth in real estate. I have another part of my net worth in the stock market through ETFs and index funds and individual stocks. And then I got part of my net worth in cash. Now, I know some of you might say, well, you know, cash is trash. Why would you have any of your net worth in cash? Well, for me, guys, I do need a peace of mind. Number one, I need to be able to have cash on the sideline in the event I have an emergency, right? That's that emergency fund I talk about a lot. Also, I like to have cash on the sidelines so that I am able to take advantage of opportunities that present themselves. See, if I got all of my money invested in real estate or in the stock market, and then another great opportunity comes along and I have no liquidity, I have no cash, then guess what? I can't take advantage of any of those things. So my recommendation to you is this: always be diversified. Have a good portion of your money in investments like real estate, like the stock market, like a business, but also keep some money on the sideline. Number one, for your emergency fund. You should have 3 to 6 months of your expenses tucked away in a safe place that's not invested in the market. Try and also have some cash reserves on the sideline, so if we do have a stock market crash or a real estate crash, you got money on the sideline that you can immediately take a look at those opportunities and be able to deploy that money so that you can continue to grow your wealth. Number 6, don't keep too much money in cash. Now, some of us only have cash, right? We have all of our money tucked away in a bank. None of it's invested in things like stock market or real estate or in a business. In my opinion, that's not a good use of your cash. Number one, you're not building any wealth by just keeping your money at the bank, right? Because the bank is not going to pay you an interest rate that's going to allow you to grow that wealth, right? Also, you're going to have inflation that you're going to run into. See, as your money sit there at the bank, guess what? Everything you need to buy with that money is going to be going up in price every single year. Think about a gallon of milk. Today, a gallon of milk may be $3.25, but next year that gallon of milk may be $3.30. So inflation is going to keep eating away at that money you got at the bank. Also, I want you to think about opportunity costs. If I got 100 grand tucked away at the bank and that's all the money I have, and I'm not investing that money, the opportunity cost is tremendous. Think about if you took 50,000 of that 100 and put it in an S&P 500 ETF that has an investment return of around 10%. See, you could be earning about $5,000 a year on that 50 grand in that 10% ETF. That's opportunity cost you're losing, right? You're losing that 5 grand a year by keeping it in your savings account at the bank. I like cash on the sideline, but I do not like all of my cash on the sideline not working for me. Number 7, don't sell your investments early. Anytime the stock market starts to trend downward, people get scared. They get emotional. Fear starts creeping in and they start to think, whoa, I'm about to lose all of my money and this is all I have. Maybe I should sell. Think about the investments that you have your money in. Do you still believe in those investments? Do you still believe in the companies inside of those investments? And if you do, just stay the course. If that investment still fundamentally nothing has changed other than the stock prices went down because of something that happened in the market, but you still feel good about that investment, hold it. What I've learned over my last 20 years of investing in the stock market and also investing in real estate is that although we do have some short-term market corrections where a particular investment may go down in value, what I've found is if it's a solid investment with good, strong fundamentals behind it, it will always go back up in value. If we're going to build wealth, we got to have a long-term hold pattern, right? We can't take our money out of investments every time the market has a slight decline. Let me know down in the comment section what you think about these 7 bad habits that will keep you from your financial freedom. If you want up to 20 free stocks, Moomoo is going to give you up to 20 free stocks when you open a new Moomoo brokerage account and you put $100 in that brokerage account. They're going to give you 8 free stocks. If you open that brokerage account and you decide to put $1,000 in that brokerage account, they're going to give you 20 free stocks, publicly traded companies. Get down in the description box, click on that Moomoo link, open up that new Moomoo account today, go get that free stock, go get that free money. My website, www.richardfain.net. Get yourself over there and grab yourself some digital products, and then do me a big favor. Join the private mentorship club. We're already over 800 strong in there, and we're all wealth builders. So if you want to put yourself around some wealth builders, get yourself over to the private mentorship club through the website.